Market seeing increased activity during the course of yesterday's session, but falling back slightly by the close. What are you making of the market movement we're seeing at the moment?
Mostly the reason why the market seemed to have a little bit of more activity yesterday was due to the trades on ARM and Diamond Trust Bank. But generally in the market, most stocks were flat in trading and slight dips in, especially in banking counters.
Before we get into some of the, the more obvious news headlines that's triggering movement on some of the counters listed on that exchange, let's take a closer look at Diamond Trust and Athi River Mining. I mean, were there any standout factors contributing to that increased activity?
On ARM, mostly we saw that it was foreign participation on both the demand and the supply side, where we suspect that it was a share swap between foreign accounts. DTK mostly was again, the trade came in late during the day, and we suspect as well that movement between restructuring of funds by fund managers yesterday.
Well, let's get straight then into some company news that's certainly moving or set to move share prices as we head into today. KenolKobil has come to the fore with its Eastern, Central and Southern African strategy. What's the overall sentiment like in the market around KenolKobil at the moment?
KenolKobil still seems to attract a lot of demand, and by last week I think we saw it rally up to around 11 shillings before it dropped again to levels of 10 shillings, between 10.20 and 10.10. Demand is still strong for the counter, especially at levels of 10 shillings, with investors hoping for positive results, positive half-year results, I think by the end of the week on Friday.
Yep, certainly those results being expected on Thursday morning. We will be chatting to the CEO during Power Lunch on Thursday as well. In the meantime, let's get some perspective from you, a market watcher here. I mean, the company has Mozambique strongly on its agenda, having registered Kenol Mozambique to facilitate further investment into Mozambique. So let's look at how investment in this territory would help to build the company's muscle.
KenolKobil basically is flexing its muscle across the region with participation, again, like you said, in Mozambique and across the region as well, Uganda, Tanzania. And we suspect that this should, again, increase the activity on the counter with demand coming in, though supply as well is there, considering the share split that was done a couple of months ago. And we suspect that this should push we should maintain the price at levels of around 11 shillings before, after the referendum, maybe we might see increased activity again with foreign capital inflows coming into the market.
Well, when it comes to investment in Zimbabwe specifically, I mean, KenolKobil is pursuing an opportunity for an acquisition in the Southern African country following that unsuccessful joint bid with Engen for the acquisition of assets in BP and Shell. To what extent is it a concern that we have a player moving into areas that big multinationals like BP and Shell are moving out of?
Again, maybe KenolKobil is looking to see whether they can fit into the pockets left by the big multinationals and dominate in the region in the coming years, with participation in the southern region as well as the East and Central Africa region.
Well, in Zimbabwe, we've got the indigenization law, of course, having raised concern amongst major foreign investors looking to head into that country, even though KenolKobil has said that they've learned lessons on how to do business in Zimbabwe. How is the market viewing the stepping into this territory?
Again, this is a new territory for KenolKobil, and what basically they are doing is trying to get into Zimbabwe by marketing themselves as African enough to get into Zimbabwe. The indigenization in Zimbabwe, is good again for KenolKobil, seeing that they might be able to dominate in the market.
In the meantime, as you were mentioning at the start, I mean, we've got banks standing squarely in the spotlight in anticipation of numbers. We've got KCB, in the meantime, having announced that it has plans to grow its loan portfolio in the second half of this year to 25%. How do you see it successfully managing to do this?
KCB will be able to, I think, raise the funds needed through the rights issue. The loan portfolio, like you said, being raised to 25%. KCB, again, I think regionally is a big market player, and they should be able to flex their muscle well enough in the region.
Are there any concerns that the market holds at the moment when it comes to non-performing loans, and that bearing some kind of a threat to its profit line moving forward?
Indeed, there is. Though I think we've noticed that most banks have gone into lending, and we might see KCB again targeting the low-end income earners with soft loans. KCB, I think, is big enough to withstand the pressures caused by non-performing loans.
With that, a lot of the focus, though, Mbuthia, gets directed towards lending rates and what's being charged. What are your expectations as far as interest rates are concerned, and the direction you see them taking, KCB specifically, taking its own lending rates moving forward?
KCB, I think, will be able to, most banks have pushed their lending rates down in line with the market performance in the last, I think, 3 weeks. And we might see KCB is, again, like I said, a big player competing with big banks like Equity in the region. And we might see it again targeting the middle to low income earners, pushing the lending rate further down.